Owning a home is not just about providing security and comfort for your family. There are actually some financial gains that are hidden within your tax benefits. We'll be talking today about those tax benefits and how they can affect you and your family. If you have not subscribed to our channel, please do so. C2C Mentors is a real estate mentorship community, and your family's finances is at the foundation. We will be talking today about 10 tax benefits as a homeowner. Number one, mortgage interest. You can deduct up to about 1 million of mortgage interest. Let's say, for example, your house is 250,000, and then you put down a 5%, or we are talking about 12,500, that'll be 5% of 250,000. You have an interest rate of 3.5%. Your principal and interest will be about $1,066 a month. This is for P and I, principal and interest. When you pay $1,066 a month, about 750 of that, it goes towards your interest. You're looking at 9,000 a year. End of the year, your mortgage servicer or your mortgage company will send you a Form 1098 mortgage interest statement, okay? In that statement, it will have the amount of mortgage interest you paid for the entire year. So in our case here, it will be what? $9,000. That's for interest. What? It will also have amount paid for property taxes. I will talk about this later. Also have amounts paid for private mortgage insurance, called PMI. The full amount you pay for your mortgage interest in that year is actually tax deductible. And this extends to second mortgages, it extends to refinance, it extends to home equity loans, extends to home equity line of credit. Number two is loan origination points or loan discount points. What are loan discount points? These are prepaid points you pay on your mortgage to actually bring down your interest rate. When you're seeking a mortgage, you can actually ask your loan officer if they have the option for you to buy down some points so it reduces your interest rate, and that automatically reduces your monthly payments. Number three, your property taxes paid are fully deductible, 100%. Property taxes. The tax rate will determine your property taxes for that year and per month. So let's say, for example, you live in an area where the taxes is 2.5%. And let's say your house has a value of 300,000. So we go 300,000 times your tax rate, which is 2.5%. Then we're talking about 7,500 a year. Divide this by 12, we are looking at about 675 a month. So at the end of the year, your mortgage servicer will send you Form 1098 mortgage interest statement. And on that mortgage interest statement, it will also include the value you paid for your property taxes. So 7,500 you paid within 12 months is also fully deductible. Number four, we'll talk about the qualified home office deductions, another great tax benefit. With the coronavirus pandemic, most corporations now have their employees working from home. And we'll see more of this trend in the coming years. Companies like Facebook and Twitter have already made their employees working home now permanently until further notice. So this credit is actually becoming very popular, and most people should take advantage of it. How does it work? Let's say, for example, the square footage of your house is 1,800, and the area where you use as your office, let's say it's 15 by 15. 15 by 15, if you translate that into square footage, it's about 225 square foot. Now, how do you determine your qualified home office deduction? You divide 225 by 1,800. This will give you 0.125. If you express this as a percentage, that will be 12.5%. In your house, your office space, you can take 12.5% of what? Of your utility bills, of your mortgage, of your sewage, of your food, of your yacht maintenance, of your renovation cost. Everything you spend within that year, you put them together and deduct 12.5% of that gross expenditure, and that will be your qualified home office deductions. The only caveat here is that you must not have a physical office out of your home. But if I have a business and I'm working from home, then I qualify for this. If you are an employee and your employer can show that they cannot provide you a space where you can work and they require you to work from home, then you are also eligible for the qualified home office deductions. With most record people now working from home, they do qualify for this, and please do take advantage of this. This is a very good tax benefit for homeowners or first-time home buyers. Number 5, it's the private mortgage insurance deduction. We call it PMI. Each time you buy a home and you're providing less than 20% of your down payment, the lender requires you to have a PMI in case of a default. They want to make sure their loan is some kind of secured and safe. The amounts you pay for your PMI is deductible, and this actually goes with some limits. So you want to make sure you talk to your tax preparer. You want to make sure you talk to your accountant about these income limits for your PMI. Most people, they buy a house, let's say with 5%, and over the years, they have actually paid up to 20%. You have a right to call your mortgage servicer and tell them, hey, I have paid 20% of my principal and I want to drop the private mortgage insurance. But that would depend if you have an FHA loan or a conventional loan. Because on an FHA loan, the PMI stays for the life of the loan. But for a conventional loan, once you pay up to 20%, you can call your mortgage servicer and they can drop the PMI. Number 7, let's talk about the capital gains exclusion. Capital gains exclusion is simply if you are single and you sell your home, you can exclude up to $250,000 of the profit without paying taxes on it, provided you have stayed in that house for 2 of the last 5 years. And if you're married filing joint, you can exclude up to 500,000 of profit. Number 8, we talk about medically necessary home improvements. Whatever medical equipment that you install in your house to necessitate movement for you, your spouse, or your siblings, they're all fully tax deductible. Number 9, we talk about renewable energy tax credit benefits. Any amount you spend to make your house energy efficient is tax deductible. So you can deduct up to 26% of all costs in making your house energy efficient. It could be installation of a fuel pump, gas turbines, insulated windows, solar panels. 26% of all those costs is actually tax deductible, and this tax credit has been extended up to December of 2021. Number 10 is a homestead exemption. Each time you buy a house, the county gives you a 20% tax deduction, provided you occupy that house before January 1st of that year. So January 1st, so 2021. So if you buy a home now, on January 1st, 2021, you will make sure you apply for your 20% homestead exemption discount. No, if you buy your house January 1st of 2021, then your exemption will only apply January 1st of 2022. If you buy your house now, because you closed before December 31st, on January 1, you are eligible for your homestead, which is 20% tax deduction. Make sure you call your realtor. Make sure you call your your county tax office and tell them you need to you want to find out if they have applied your 20% tax discount, and if they have not done so, make sure you follow up the necessary paperwork and you do that, because it is a benefit for you as a homeowner. But most people sometimes they skip that, or they don't check once they close on the house. So these are 10 solid tax benefits for homeowners and first-time home buyers. If you were wondering about, is it a good idea for me to own a property, I think these taxes, they should encourage you. And like I said in one of my videos, mortgages is one of the greatest tools people use to create generational wealth. 90% of all millionaires in the United States of America, they got rich through real estate. That's why we always say, do not wait to buy real estate. You buy real estate and you wait. So if you have not subscribed to our channel, please do so. C2C Mentors is a real estate mentorship community, and your family's finances is at the foundation. Thank you, and see you on our next video.